everything under 5 years is kind of short term. But it's interesting. You look at that and you're like, oh yeah, like why aren't people more excited about it? And I feel like I have this weird feeling. I'm curious what you think about that. Maybe we are just entering a new era of Bitcoin where people are less hyped and also less sad about it. It's just like slowly grinding up. Or do you feel like that blow off tops was like this excitement will come back?
I'm still of the mindset that the blow off top will happen at some point. I think that, there's a certain point in people's psyche where they just can't take the pain of not being involved anymore. But right now, nobody's really even paying attention, which is very strange. I just never thought, looking back a few years ago, that we would be at 110,000 or 120,000 or even 100,000 or whatever. And people wouldn't be just like clamoring for Bitcoin, that there'd just be so little enthusiasm in the market. But again, like I guess it is a good thing, right? Like if people are not paying attention, that means that there's probably plenty of upside and not a whole lot of downside there. And what we've seen, I think, every time the price does pump, there's quickly a buildup of leverage, and then that leverage quickly gets wiped out. So we haven't had until we see that like kind of stretched out enthusiasm and just massive price runs where there's more and more leverage able to be built up over a longer period of time. I don't think that we are in a position where we can have a very deep and long drawn out actual bear market in the price. I think we have a bear market in sentiment that is kind of offsetting the bull market in the absolute price that we're seeing, that you're just pointing out there. And at some point, like the macro headwinds or tailwinds that we all expect to come from election year in the US and the Fed lowering rates and just the deficits continuing to blow out, and the gold trade showing all of that all has to come back to Bitcoin. So that's still my base expectation, and we'll see what kind of timeline it actually takes to play out there.
Yeah, and it's also interesting because one of my theories is that like because the pockets that are now into Bitcoin are less panicked than the pockets that came into Bitcoin like 2011, 2013, 2015, even like 2017, meaning that we now have companies that are bigger that just like buy and like they're more price agnostic. They just like have a plan to accumulate Bitcoin. We now also have more data. So even like the people that are in Bitcoin might also just be already know about this ups and downs and be more ready for it, and just be like DCA is also something that's such a big meme that's just kind of like maybe people are just like now doing that more and more, but I don't really know. Like I for some reason I miss almost those like exciting times and this very bearish times. Like I wrote Bitcoin from I think 2020, like it was like 5k up in the highs of to 69k, and then I wrote it down again to 16k, and then up again to over 100k. It is such an amazing experience doing that, and I kind of miss that, and I hope it comes back. But at some point, probably Bitcoin will be super boring and just like very stable. But I think we're not yet there yet, as you said.
Yeah, on the one hand, you see just a lot of normalization around at least my social circle. It's much more common for people to say, "Oh yeah, I own a little bit of Bitcoin," whether that's through the ETF and just Bitcoin exposure, or actually holding, real Bitcoin, or even holding their own keys. It's just you're not weird by bringing up the topic. And in fact, like most people, obviously, because they know that I am a bit Bitcoiner and work in the Bitcoin space and all of that, I get that question a lot, like, "Oh, how's it going?" But it's very common, I think, for people to own Bitcoin now, or at least have some Bitcoin exposure. It's not weird at all. But at the same time, like people are not just like banging down the door in the way that we've seen with like this gold trade, and like these pictures of people lining up in Australia or whatever to get exposure to gold right at the top of at least this local move. Like that's something that we just have not seen, even with the amount of bullish action on the price that has happened over the last couple of years in this, technical bull market, but enthusiasm bear market. I think it will change though. I think human nature does not shift, uh, significantly over time. The fact that we are able to see this like huge 25% move in gold, which is a massive market relative to Bitcoin, and just straight melt up type of price action, like that should portend that there's plenty of upside to Bitcoin as and when people start to turn their attention to it. And they just haven't yet.
How do you actually look at the gold moves? Like gold was a super surprising asset for me in 2025 that it went up so crazy. And I think in year to date 2025 it even outperformed Bitcoin. I'm not sure about like the exact data, but like it really went really great this year, and it's completely surprised me.
Yeah, I think it has outperformed Bitcoin in that short time period, which gold bugs will very happily point out. I know this will come out in a couple of weeks, but this week's Fire BTC is kind of jumping on the gold conversation because I'd put out some posts out there just talking about kind of the irony of gold bugs using the internet to dunk on Bitcoiners for their short term beating of Bitcoin in terms of price. But why is it happening? Well, it's happening because the world is going through a very prominent change in the way that it views US treasuries and the US in terms of its global reach and hegemony. That does not mean that the US is going to we're just going to wake up one day and it's no longer a superpower, but there definitely has been a gradual shift away from a US centric global model and more toward this multipolar world that I think a lot of people talk about. And, a lot of that was kind of kicked into high gear when the US sanctioned Russia away from SWIFT and cut them off at the knees in terms of their US Treasury access. And you have to look at other geopolitical players and say, well, why wouldn't they start considering other avenues for moving their exposure to the US away from the US? And historically speaking, US Treasuries has kind of sat at the foundation of the global monetary and financial system. It has been the global reserve asset. And gold was that previously. Well, now central banks and governments, they're already set up to own gold. They already understand it. These are like older people who are boomers that understand gold much more than they understand Bitcoin. And so I think their natural inclination is to say, okay, well, we need to move to a more sovereign asset that we can own that is not dependent on US hegemony. And gold is kind of like the obvious choice for doing that. And then, Bitcoin is still just so small, even relative to gold now. It's a $2 trillion asset. Gold is now a $30 trillion asset. Well, all of that capital that needs to move away from US treasuries or move into these sovereign type assets, it needs a place that has enough liquidity and depth to be able to absorb it. And Bitcoin just isn't big enough yet for those flows to actually be to be absorbed in a way that's not like kind of we think of it as constructive to the price, but for them it's kind of destructive to the price because you're just funneling all of this capital into something that would just move higher so significantly. And so I think it's a combination of all of those things where people they're looking for ways to hedge their exposure to the US. There's a momentum that gold has had just because of its historical standing and the fact that people already kind of understand what it is, how to buy it, and how to hold it, that Bitcoin just doesn't enjoy yet. But that doesn't mean that it's not part of the conversation. I think we will see over the next 10 years that gold versus Bitcoin allocation starts to even out, and that obviously is very bullish for the price.
Yeah, it's almost like the gold is the old school fire alarm for how bad the current financial system is doing. And Bitcoin is the new fire alarm that just kind of gets built, which is so in any, like we both agree, and like most of the audience here also probably agrees, like in all the ways that Bitcoin is better than gold. And actually, like I was kind of shocked because I think a lot of gold bugs actually now starting to pay attention to Bitcoin. And I see it in my comments, I see it in the replies, even in chat when I do live streams, where people say like, oh, like don't dunk on gold. It's like the predecessor to Bitcoin and all of that. And I'm like, yeah, of course, like there's a lot of like, I have respect to gold, but it's just a commodity. And now you also have to realize that there's a new kid on the block that's just so much better in any way. It's almost saying like when the car kind of replaced the horse, saying like, oh, don't disrespect the horse. I'm not disrespecting the horse. It's just time for the car now. And so it's kind of fun seeing that difference between gold and Bitcoin. And there's this great chart, I think Jesse Myers, and he does 2023 and 2025. He compared the size of the markets, and he kind of showed that gold and Bitcoin are the only two things that really were growing in the last 2 years of a big asset, and the other things like bonds and money kind of lost to them. Real estate also won a little bit, but like gold and Bitcoin were the big asset chunks that actually won. And so it's really interesting for me to just like live in that time and kind of observe what's going on with the fire alarms of the system.
Well, look, and I'm looking right now at the S&P 500 versus gold chart, and I mean, right now it is flat all the way going back to uh, July, let's say, of 2015. It's like there's been so much hype around the stock market and seeing it hit all-time highs and all of that, but when you measure it versus gold, which has no cash flows, has no productivity, as they say, has no intrinsic value, although the gold bugs will say, oh yeah, it does have intrinsic value, that doesn't actually exist. But it's pretty incredible that you could have just held gold and done just as well as stocks, if not better, depending on like how and when you are allocating to those assets. I think that breaks a lot of people's brains. It's this idea that, oh no, Warren Buffett is very famous for this. He's like, oh, never want to hold gold because it's not a productive asset. Okay, but if the value of the assets that you do own is primarily driven by monetary debasement and not actual productivity, then what are you accomplishing here aside from having to be kind of a stock picker, or just creating a whole bunch of extra counterparty risk or risk to individual companies or management and all the other types of like operational risk that you have when you own stocks, especially if you own individual companies.
Yeah, I couldn't find it quickly, but I showed just last week at a conference. I gave a small keynote on that topic, and I showed the real estate prices measured in US dollar. Obviously, everything goes up. Then real estate prices measured in gold. Then you can see it is more flat, but it still goes down over time, depending on the time frame. If you like go all the way back to 1900s, like there's like some upturns also. But if you go the last like 20, 30 years, like it's all going down on a trend basis. And then you look at the real estate prices in Bitcoin, no matter what time frame, it's just tremendous. Of like we went from, I think it started 2011 with like 400,000, 500,000 Bitcoin for an average US medium home, went down to like a few thousand, a few hundred, and now we had like 3, 4, 5 Bitcoin, whatever the kind of current number is. And so you can see, and that's why I was like, people get really upset at me if I say like, oh, you will buy a great house for like 0.1 Bitcoin. And I'm like, just look at what happened the last 10 years, and you're like this just has to continue that way, and it's just a matter of time till this actually happens. It's just like, okay, like at some point it has to actually happen. So it's interesting for
I
me
think
to
in their
look.
defense, Robin, it is still a fairly short period of time that Bitcoin has been around, and the vast majority of those gains that you're referring to relative to real estate or gold or the S&P or whatever did happen early on in Bitcoin's life when it was so small, right? Like it didn't take a whole lot of capital for it to move up by thousands of percent. And so I don't know that that's necessarily a fair comparison. I think now when you're talking about a 10-year time frame or a 5 to 10 year time frame, at that point it's starting to become a lot more relevant, and you can still see the degradation in the value of these other assets relative to Bitcoin when you go on those shorter time frames. What we need to see, or what we expect to see, is that that trend does continue, and that, you know, Bitcoin is still appreciating at a much faster rate relative to these other assets. And I think, you know, in 5 years' time, in 10 years' time, assuming that things play out the way that we expect, we'll be able to make a much more compelling case when we show real estate versus Bitcoin, gold versus Bitcoin, stocks versus Bitcoin, because you can filter out all of that early kind of noise for what it is, and still make a very compelling case, on the outperformance of Bitcoin, and that, you know, assets will always lose value versus it. We all know that's intrinsically true because of the fact that Bitcoin is, you know, perfectly fixed in supply, and so it has to go up over time. And, you know, more and more people coming into the space are always going to create a little bit of a faster appreciation than other assets, because it's more of like a novelty advantage that Bitcoin has. It's just that, you know, being small, being new, and being something that has like a ratchet effect on people's brains, where like once you understand Bitcoin, you don't really go back. Like you don't grok Bitcoin and then say, oh no, now all of a sudden this doesn't make any sense to me. I think there are extraordinarily few cases of that playing out that way.
Yeah, it is a fair point of like it is a lot easier to go from like a $10 million market cap to $100 million market cap than it is from like a $2 trillion market cap to a $200 trillion market cap. Even though it's like the same X, it's like a 10x, but like it just takes, or it's not it would be 20 trillion, not 200 trillion, but it takes a lot more purchasing power, and that's why I also like when we started about talking in the beginning of like how the blue of tops of Bitcoin. It's just like Bitcoin now moves differently because like there's a lot more purchasing power in Bitcoin. George Boudin made the comparison of Bitcoin that we started as a speedboat in like 2017 and 2015, and now we're slowly moving towards being like an aircraft carrier that's just like way more stable and like harder to move, but also when it's moving in a direction, it's like really hard to stop. And so I find that kind of interesting, but I still feel like we are way earlier than people think. Like I think that aircraft carrier comparison is kind of breaking down. I still feel like we're a normal boat. Like
This is
even
why
though
it's
like
also
2 trillion
so
is big.
important. This is why it's also so important to do everything you can to build your stack as quickly as possible, as early as possible, because like, and this is just general compounding nature, is that the longer you are holding your Bitcoin, and the more sats that you can buy at lower prices, the more and more the speed of that compounding, really accelerates for you and your personal wealth, right? So if we're just talking about like personal strategy, personal wealth, it's always better to have more Bitcoin today than to accumulate that Bitcoin over time, because the natural BTC yield that you're getting on the amount that you can stack is always going to go down, because we're talking about a fixed supply asset. It's just, this can't grow in an exponential type nature forever. There has to be a degradation in the amount of absolute Bitcoin that you can secure. But the value of that Bitcoin that's secured early can compound in ways that is kind of unfathomable to a lot of people. But that takes like early and very intentional stacking in those early days. I call this the stacking sprint in my newsletter, where like if you're really focused for like a 4-year time horizon and just are doing everything you can to stack as quickly and as much as possible, at that point you can kind of let that compounding take care of the rest of the journey for you, and you can start to actually let off the gas, because this concept of BTC yield being so much lower, as you're saying, it's so much harder to add an extra Bitcoin to your stack now than it used to be 10 years ago when the price was so much lower.
And I think everyone can kind of relate to that who has been stacking for like for like 4 or 5 years or longer than that. In the beginning, you like added the Bitcoin units so quickly, and then in the end, it's like it almost doesn't make a difference if you add more more to the Bitcoin, just because it got so much, like the Bitcoin price ran out quicker than your salary did. Thank you for watching this video. This was only a snippet of the podcast, and if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.